Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Theta Network and its token Theta. None of the content is financial advice. Let's get started. The price of Theta right now is at around 50 cents. Again, it is very close to the bottom that it created last week at around 30 cents. Again, new lows for Theta in quarter 4 2025. Again, that's not a good sign by any stretch of the imagination. And that's just an opinion. Again, you can see since 2021 the lows again never took any major support. Again, they were in this range between that 70 cents and about $1.20 for a lot of 2022 and 2023 and some 2024. In 2024, price did rally to about that 0.23 fib level in March, rally to that $4 level. In December, the price was much lower than in March. Again, that is not too dissimilar from all of the lower cap altcoin. But since again 2025 began, price has been in downturn. In this video was requested by community members, so here I am making it. Again, just my interpretation of the models. The 20-week simple moving average for Theta is at around 77 cents, so that's one major area to look for in the rallies. The 21-week exponential moving average at around 80 cents. And the 50-week simple moving average at around $1.18. So those are the three levels to watch to the upside in an event of a rally in 2025 last quarter, that is this quarter. And the next level, if price permits to a breakout, then the 0.23 level at Fib level at around $4 or $3.93 is key to look from technical perspective. Moving to the machine learning side of things, again from here on all of the charts available on cryptoweeklies.com, link on the bottom of your screen, all available for free. We did update our website. Again, you can straight away check out all of the content related to YouTube from this or YouTube videos that we make from this website itself. Again, this is my own website. It's a pet project. All of these charts are derived from statistical and machine learning based forecast, regression analysis, and again combination of these multifaceted model, all easy to understand without any jargon. So the base case for Theta, again, if there is no significant bullishness to the upside, this pink line as established by this machine learning model could take the price closer to that 70 cents level. That's the 20-week simple moving averages territory. These are weekly averages, so keep in mind the actual candle body could be 10 to 20% higher than the weekly average. Whereas the bull case without a major euphoria in the next 3 months, the price could be somewhere close to $1.20, and again $1.20, and if you add that 10% on that, it gets close to that 50-week moving average. If there is a non-euphoria 1 standard deviation bull run, the yellow line. The orange line is a euphoria prediction from the seasonal ARIMA based machine learning model. The 2 standard deviation euphoria case for Theta towards the end of the year is at around $2 level. So without a major euphoria, as the weekly price action is not in a bullish turn like most of the cryptos right now, it would take a major euphoria to break towards that $2, and again applying that 20%. Again, in that scenario, what would come into play is this potential descending line over here from highs to highs, and again this could meet the October-November if there is a major rally to that $2.30 level to conclude this bull run. Again, this is again all not looking at as great as anticipated by most of the community members, but that's just a sobering reality of what the price action has been in the bear market starting 2022. So again, that's the most area of confluence. Again, if across models at around that $2 to $2.25, applying that 10 to 20% increment on the euphoria ceiling. Again, the 3 standard deviation, again right now out of scope, but there is a potential that again if there is a 3 standard deviation 99.7 percentile rally, the blow of TWAP scenario plays out for theta, that perfectly again everything would perfectly align, then the $3.93, which is this the 0.236 fib level, is still in play, but it would take not just 1 or 2 standard deviation moves to the upside, 3 standard deviation sustained euphoria for quite a bit, quite months to weeks, and then again challenging this orange line as well. And right now we're not even challenging this yellow line. I haven't been challenging this yellow line for quite a bit. Again, last time this yellow line was challenged was in December of 2024. So just wanted to keep everything honest. The regression based analysis again says the price action value could be at $2.11 for theta, again close to this yellow line over here. That's again area of confluence. If there is one more rally back to the fair value state before 2026 bear market, then that $2.30 again could come into play. If there is even more euphoria again, then that's when the $4 level, as mentioned earlier, the 3 standard deviation case, if that could pan out in the next quarter, then the 0.23 level becomes more and more the key for theta. As it stands, again, you would imagine the price risk has gone down quite a bit as the price has deviated a lot from the fair value. The risk is essentially right now, again, they are never zero, but this model interprets them as they're close enough to rounded off to zero if the hypothesis is that in the last quarter the prices rally. Theta hasn't rallied yet per this polynomial regression based fair valuation. That means if it were to rally, then again DC at this point in time per this model is significantly lower risk than, let's say, in 2024 March, December, those euphoria phases of the market cycle. Again, this model tries to cut the price action into 2 halves, one which is in a great accumulation territory, the other is not so much favorable seasonality for theta. Again, as the price approaches this dotted 2 standard deviation residual, again that's where major peaks have occurred. Major peaks, again by that I mean in 2024 twice, as well as in 2021. If 2025 could price could stretch us to that level again without changing the slope of this regression function, again there is a high likelihood that with the series of lower lows and lower highs, the slope of this regression function could change in the next few weeks to months. So again, this video is made as of October 11, and again all of these charts are available and get updated every day using the latest price action, adding only that element. Again, they are not retroactively drawn based on some bias to the bullish side or bearish side. It is again a totally automated system reacting to the latest price action for theta. As of today, that magic number is at around $8 level. If we come, again there is a high likelihood that we fall short of this level. Again, if we come, let's say between 0.3 and 0.4 risk like we did back in March 2024 and slightly higher in December 2024, then the price at that level could be somewhere between $3.70 and about $4.60. A midpoint would be again that $4 level, 0.236. So second area of confluence, if the regression based dotted 2 standard deviation line were to be missed and the risk level were to only be close enough to that 0.3 0.4 risk like theta observed in mid-March 2024 and in December 2024. Again, so that's one way to identify what price could do. The time weighted average price though has not been a great indicator, but still it has been an intermittently active kind of indicator, where if the price is significantly below the time weighted average price marked by this blue line, and with a series of accumulation zones behind us, if the hypothesis is that eventually the price will go in the euphoria phases of the bull run higher than the time weighted average price, still accumulating below the time weighted average price. Not the worst idea, but again, price has not spent a lot of time above the time weighted average price in most of the bull run of 2024 and 2025. So again, it comes with a caveat, but still it's in an accumulation phase for the time weighted average price risk based model. The SMA model, the simple moving average model, says the risk has gone down to 17%. If it goes somewhere between 0.4 and 0.5, the price could be somewhere close to that $5 target, between $5 and $6. So this model is slightly more optimistic for Theta. All in all, the estimated bull run peak for Theta, again, all these models are available for free, and they get updated as the price action moves. So the conservative case for Theta, for just the risk-based model, not any other interpretation of this risk-based model, says the price action could be somewhere close to the $7.50 level, as mentioned earlier. Again, if everything aligns perfectly, that magic number is at around $8. If we exceed that, the $12 level, again, this becomes more and more unlikely as we go further out into the last quarter of 2024. All the major area of confluence, as mentioned earlier, for Theta is first, again, if there is a bullish quarter 4, is first at this between $2.30, so $2 and $2.30 level, and the secondary area of most area of confluence is that at around $4. That's the 0.23 Fib level. Moving to the magic number, that's the $8 target, that the 0.5 Fib level. So multiple models which do not talk to each other have these areas of confluence. That's why I made this video. Hope you enjoyed the content. If you did, please give a like and subscribe. And again, none of the content financial advice. Hope to see you again tomorrow. Thank you and have a nice day. Bye bye.